Please welcome to the stage founder and managing partner of SkyBridge Capital, Anthony Scaramucci, and managing editor of Bloomberg News, Stacy-Marie Ishmael.
Hey, Stace.
What's going on in crypto these days, Anthony?
Oh my God, what's going on in crypto? Well,
I heard you lost some money.
Well, I actually didn't lose the money because Sam gave me the money. But yes, we lost money in general because the overall portfolio has gone down as a result of this debacle. So yes, I guess so, yeah.
So let's start by saying that for those of you who follow crypto markets closely, I'm sorry. For those of you who don't follow crypto markets closely, one of the most important things to understand is 2022 has had a series of events that each time it happened, folks were like, well, this is clearly the worst thing that could happen to this asset class. And then in the past 5 days, we experienced a pretty significant set of bankruptcy filings and revelations about the FTX crypto exchange empire and related entities that were all headed and founded by a gentleman named Sam Bankman-Fried, which brings us to the subject of this conversation today. You, mere weeks ago, it feels like, announced that you and SBF, with whom you had various types of business relationships, were entering into a transaction in which you would sell 30% of your fund.
My firm, yep.
Of your firm to Sam. That is a portion of your life's work that is now kind of going to be caught up in bankruptcy proceedings, possible liquidation. Talk a little bit about how you got to the point of entering into that relationship with Sam and what you've learned since then.
Yeah, so I don't want to revise history. I want to talk about it before the fact and then after the fact. So I met Sam through a mutual friend. I had an investment in something called Ledger X, where I was one of the seed investors, which was a crypto derivatives exchange that had some licenses that were very important in the United States. And so I made a connection to Sam Bankman-Fried, to that group. He ended up buying that group, and it looked like a great transaction for everybody. And prior to this past week, they seemed very happy together. And then it dovetailed into a discussion about doing a sponsorship for the SALT conference. And so as you guys know, we have a hedge fund conference that we sort of morphed slightly into a crypto event. And Sam wanted to be the lead sponsor, so sort of like SALT FTX, if you will. And so we negotiated a transaction with him, which was a 3-year deal. John, I think it was a 3-year deal. And so we did the conference at the Javits Center successfully. And then we made a decision to do a conference with him in the Bahamas, because that's where his FTX International was based. That was, I think, a very successful event, which led to me having a lunch with him over the summer. And so I met with Sam in August in the Bahamas, and he said, listen, I'm interested in buying the company. And
whole company at the time.
The whole company. I was hesitant to do that. I'm 58 years old. It's been my life's work. I said, listen, why don't we start slower than that, smaller than that, and I would probably need cash as opposed to stock because of my age and sort of I want to pay out some of my partners that would be there with me. So we negotiated from August 6th to the day that it closed on September 7th, a transaction. He bought 30% of the company, wired us the money. He did ask me to put $10 million of the proceeds into the FTT token, which I thought was in the spirit of the comity of the partnership. I didn't think it was a big deal at the time. So I did that. And then we went to the Middle East. FII was a few weeks ago, probably 15, 16 days ago.
And when you say you went to the Middle East, you hosted him. You were introducing him to folks
he was raising capital. His narrative, which was unfortunately made up, but his narrative was that he had $1 billion in cash. He wanted to raise another $1 billion. He wanted to fortify his businesses, and he was buying distressed in crypto, sort of to shore up the industry. And so we embarked upon a Middle East trip to Riyadh, Dubai, and Abu Dhabi. And listen, I've been doing this longer than Sam has been alive, and so I have a lot of relationships over there, and I availed him to a lot of those relationships. And I think what happened, frankly, is he said something about CZ, the founder of Binance. in possibly one or two of those meetings, it got back to CZ. He got super upset about it and said, okay, we're in a divorce. We're not going to make love. That was the Twitter comments, right? And he hit him with about $500 million worth of FTT tokens. And I don't think Sam could keep that token at a level that would support all of the infrastructure and the leverage that he had on his balance sheet. And so we saw a collapse. So weirdly, the association with us and the trip to the Middle East sort of tipped the first domino a lot earlier than maybe that domino would have been tipped otherwise.
Now, just to provide a little bit of context, CZ being the CEO of Binance sort of emerging from the ashes of this latest fire and kind of positioning him, CZ, but also Binance as like the last trustworthy operator standing. One of the things that CZ has said in the past couple of days is, we as an industry need to come together. We need to support each other. We need to try to raise money, get this fund together. That was a sentiment that was extremely well received, at least by Bitcoin prices. But what is your perspective on an industry that has said for the past decade or so that it's all about transparency, decentralization, a rejection of the norms of traditional finance, that it's turning into a smaller and smaller club?
Well, there was a fight, and there was an intellectual fight with Sam related to regulation in the United States. The decentralized philosophical fans of crypto didn't like the direction that Sam was suggesting. So we can debate that or explain that, but I don't really think that's as important as the central point of your question, which is the club is getting smaller, and there's been the crypto industry has been cut to ribbons this year. I think it peaked last November, $3+ trillion. It's just around $800 billion right now. And so what should the industry do to survive and make itself better? My opinion is more collaboration. But the problem with the industry is there's a lot of young people that like antagonizing each other
on Twitter
and lighting each other up on Twitter. And you and I were talking in the green room. I had an old boss at Goldman. He said, your job is to take your 6-shooters and point them out to the enemy. Don't point them on each other. And we do that in this industry, and I think it's a shame. And I think if the industry really wants to grow up, we need a lot more collaboration. I think that there was a red flag, sort of a penalty flag of Sam going after CZ, but also CZ going after Sam. I mean, there was a Twitter spat between the two of them. I think it would be better for everybody if we just sort of calm things down and row in the boat together in synchronicity as opposed to taking the oars and smacking each over the head with the oars. So, there's a definite problem in the industry. But you did mention my business. I just want to point this out. The good news for me, maybe it's a product of having good lawyers, that piece that Sam owns can't be transferred to anybody without my permission.
Including in a liquidation event?
Including in a liquidation event. Yeah, they can't force a liquidation because I'm the majority shareholder of the company, so they can't force a liquidation. And remember, it's a minority position. So I'm hopeful that I'll be able to negotiate now with the trustee or the administrator of the bankruptcy a reasonable price for that equity, and we'll buy it back. And our business has been hurt by the association. There's no question about that. But I also think it gives me an opportunity to talk about this very transparently. And I appreciate the invite today because I think it's important to talk about this transparently so that other people don't make the mistake. There are 25 venture capitalists that invested in Sam's business. A lot of them right now, they don't want to share a stage with anybody.
What is the mistake, do you think? Was the mistake investing in him? Was the mistake insufficient due diligence?
Well, I think, listen, I talked to a lot of my friends that were involved in the due diligence process. I think it's very hard to protect yourself against that sort of misrepresentation. Let's call it misrepresentation for right now. If you're being shown a balance sheet that may or may not be accurate, if you're being showed income statements that may or not be accurate, that are being validated by third parties, that's pretty rough. That's very hard to see through. If you're running a background check on somebody like Sam, you're not going to find anything. He was unblemished, if you will, prior to this incident. So I think it's an issue of certain things are going to fall through the cracks, whether you like it or not. Now, remember, he was giving me the money And so I was looking and I was doing a lot of due diligence on him, but clearly not enough. And so I think it's important to explain that to people and share it with people, because if just one person could avoid the calamity that I'm living with right now this week and perhaps over the next how many weeks in terms of getting my equity back, it's worth it for me to share the story with you.
You come from traditional finance, and there's been an interesting trend of, Coinbase in its earnings will say things like, we think institutional investors are part of the future of this asset class. We've had crypto-native companies announce major partnerships with firms and funds like BlackRock. What is the sentiment of institutional investors who are looking at the debacle of the past 12 months? Are they thinking like now is a time for us to get in on this space because valuations are very cheap? Or are they thinking, oof, we're going to listen to our compliance officers and wait this one out?
So I think it's a combination, frankly. I think there's some of that. I think we saw some movement this year. BlackRock announced that deal with Coinbase, which you remember. They also set up a Bitcoin trust, which I think is an interesting strategy. That means they have demand for it. Fidelity is in the 401k space. We're one of the first companies to be in that 401k space with them as a client, allowing for Bitcoin on our 401k plans. So yes, there's some of that. I think there's also an I told you so moment. There's some schadenfreude in this system, which is human nature. But ultimately, you have to make an intellectual and analytical decision about the use cases of cryptocurrency and the blockchain. Do you think that's going to be part of the future or not? I have drawn the conclusion, rightly or wrongly, that these are better products than what we're currently using in traditional finance. And better products typically get adopted. It may take a while. There may be a resistance from the old guard, but they usually do get adopted. And so I think what happened this year, whether it was Three Arrows, FTX, Terra Luna, Voyager, Celsius, we pick all the debacles, I think that probably slowed the forward progress and slowed the future, but I still believe that the future is coming. And, there were people that had horses and carriages that thought the horseless carriage was a fad. Bill Gates said in the mid-90s that the internet was a fad. He's a brilliant guy, so he reversed course and obviously started plowing money into the internet. But we can look at every time there's a paradigmatic shift in technology that is transformational, you get this sort of thing, but you also get an induction of bad behavior, whether it's the railroad, steel, et cetera.
Part of the frauds that you're identifying, railroad, steel, et cetera, were met by fairly assertive regulatory responses.
Yeah, absolutely.
And SBF, for better or worse, became the public face of the industry's attempt to write its own version of regulation. What do you think is going to come next with the regulatory environment globally?
Well, I don't know the answer, but I'm hoping people like a Brian Armstrong, ACZ internationally, Brian in the United States, or people like Brian will step into the vacuum and try to lead in that space and see if they can implore the regulators in the United States to provide more guidance. I think the crypto industry has learned why we have banking regulation, right? Because you had the Wild West in the 1920s, you had another incident with the S&L crisis in the late 80s into the early 90s, and so yes, you need regulation. Unfortunately, we have primordial instincts, and we got a lot of greedy people, and you can set things up without the right guardrails and cause a lot of damage, which is happening right now.
Which is exactly what we're witnessing. Thank you very much.
Great, thank you. Thank you guys for having me. Appreciate it. Thank you. Thank you.